the VENDORecon short pay scenario. This is the scenario where you want to short pay the vendor the taxes that they've billed us. You might choose to do this in cases of a direct pay permit, or if you're making an exempt purchase and the vendor's billing you taxes on it. Let's go ahead and create an LAV invoice with a short pay. Enter the invoice amount at the header. Put a value in the reference field. And for this scenario, the vendor's billing us $1,080 at the header. This includes a $1,000 line item and $80 in tax. Leave the Calculate Tax box checked, and there's no need to enter the tax amount billed by the vendor. Let's enter our purchase order data. For this scenario, we're entering a $1,000 U1 taxable line item. In this case, we have a direct pay permit, so we've defaulted the U1 tax code, which is our consumer use tax code. You'll notice that the tax amount here is 0, and that's because for this tax code, we're not expected to pay any taxes to the vendor. However, you'll notice that there's a balance up here of $80, and that's because the vendor is trying to bill us $80 on a U1 direct pay transaction. Within our VENDORecon scenario, we want to short pay this vendor the $80 in tax and print a message in this text field in order to convey a message on the check remittance stub. So at this point, we can invoke VENDORecon by either clicking on the Save button and posting the document immediately, or we can click on the Simulate button to see the results of VENDORecon prior to posting the invoice. Let's click on the Simulate button. At this point, VENDORecon has been invoked and has short paid the vendor. You'll notice that the amount payable to the vendor is now $1,000 instead of the $1,080 that we had originally entered. You'll also notice that the goods receipt amount is reversed in the same manner in which it was posted during the goods receipt. And you'll also notice that we are self-assessing the taxes since we had input this transaction with a U1 tax code. The U1 tax code remains, we've short paid the vendor the tax, and the invoice is now in balance. Let's go ahead and post the document. As we look at the invoice document, I want to point out a few things. Firstly, you'll notice that the amount paid to the vendor is the $1,000, so we've effectively short paid the $80 that they had originally billed us. The tax amount that we're paying to the vendor is 0. The tax code on the transaction is a U1, as we had originally entered. And one other thing I want to point out as well. You'll notice that this text field now includes a message, and is a configurable message that can appear on the check remittance stub as a message to the vendor that you've short paid them the tax. Having this message automatically print on the check remittance stub can reduce the need for AP to have to type a message in. It also ensures that you get consistent messaging, and if you have spot reports, you'll be able to see this message in the text field within the spot reports. Let's look at the accounting document. So as you look at the accounting document, you'll see that we still have the U1 tax code posting. We're paying the vendor without the taxes, so we've short paid them the tax. We've reversed out the goods receipt, and we're self-assessing the taxes according to the U1 tax code. If we look at the taxes detail, we'll see that we've calculated and self-assessed the taxes according to our U1 tax calculation. So that concludes the short pay scenario with VENDORecon.